Hello and welcome to the World Battery Metals and Mining News for the 22nd of July 2024. U.S. says billionaire Gertler's royalties must go to Congo for sanctions deal. A senior White House advisor, Amos Hochstein, has asserted that any agreement to lift sanctions on Dan Gertler, the mining billionaire accused of corruption, must ensure that Gertler's royalties in the Democratic Republic of Congo, DRC, are transferred to the Congolese government. The U.S. previously sanctioned Gertler in 2017 for allegedly exploiting his connections to former President Joseph Kabila to misappropriate over $1 billion from the DRC. Hochstein emphasized the importance of redirecting the royalties to support both U.S. interests and benefit the DRC, ensuring continued investment and avoiding legal complexities. The move aims to counteract Chinese dominance in the region's critical mineral resources, particularly as Gertler's presence deters Western investment. Discussions have been ongoing for 18 months, with potential conditions including the sale of Gertler's assets, his departure from Congo, and business audits to ensure compliance, along with a mechanism for reimposing sanctions if necessary. Vale to open new copper-nickel mine in Ontario. Vale Base Metals is launching a new open-pit mine at the historic Stobie mine site in Sudbury, Ontario, with an investment of $205 million over the next 4 years. This mine will produce 300,000 tons of nickel and copper initially, ramping up to 1.5 million tons annually by 2025, alongside byproducts like cobalt and precious metals. The project will involve local and indigenous contractors, members of the United Steelworkers Union, and aims to create sustainable and inclusive growth. Managed by mining contractor Thiess, the project will employ 62 to 80 new workers. This initiative is part of Vale's broader $945 million plan to revitalize its Sudbury copper complex. Copper prices, output drive Grupo Mexico profit jump. Grupo Mexico, a leading mining and transport conglomerate, reported a 34% increase in second quarter net profit, reaching $1.122 billion, surpassing analyst expectations. This growth was driven by a 27% increase in revenue to $4.397 billion, fueled by higher copper prices and increased mining output, particularly from Peru and Mexico. Copper production rose 4.7% to 270,747 metric tons, and the company has revised its annual production forecast to 1.08 million tons. Additionally, Grupo Mexico restarted the long-delayed Tía María project in Peru, forecasting annual production of 120,000 tons of copper and significant economic contributions. The firm's transport division also saw a sales increase, despite challenges from migrant congestion affecting its rail network. Anglo American shrinks trading unit as part of major restructuring. Mining giant Anglo American plc is downsizing its trading operations as part of a restructuring plan following an unsuccessful takeover bid by BHP Group Limited earlier this year. The company has recently cut positions, including top roles in its London and Singapore offices, and announced that it will stop entering long-term deals for commodities it doesn't produce. This move is part of a broader focus on key commodities while trimming down costly business units. The restructuring also involves plans to divest its platinum business and exit coal, diamonds, and nickel sectors. This strategic shift reflects Anglo's efforts to streamline operations and concentrate on core assets after BHP's acquisition attempt spurred a faster business overhaul. China's refined copper exports double to record on surplus. China's refined copper exports soared to a record high of 157,751 tons in June, more than doubling from May's total due to weak domestic demand, which prompted smelters to seek overseas markets. This increase surpassed the previous peak of 102,000 tons set in 2012. The economic slowdown in China, demonstrated by its slowest growth in 5 quarters through June, has influenced global copper prices, causing a 14% drop since mid-May. In response, the People's Bank of China reduced a key short-term policy rate to stimulate economic activity. Concurrently, copper inventories have surged, with stockpiles at London Metal Exchange warehouses doubling since mid-May. Additionally, Chinese gold imports significantly declined in June, and aluminum imports from Russia fell for the 3rd consecutive month. Ero Copper and Vale close agreement on Brazil's furnace project. Ero Copper has finalized an agreement with Vale's Salobo Metais to advance the furnace iron oxide copper gold project in Brazil's Pará state. Located 50 kilometers southeast of Vale's Salobo operations and 190 kilometers from Ero Copper's Tucumã project, the deal allows Ero Copper to earn a 60% stake in Furnace by meeting exploration, engineering, and development milestones over 5 years. Ero Copper will finance all exploration and engineering efforts during this period, providing Vale a free carry of up to 11% on future construction capital expenditures. The project benefits from its proximity to significant regional infrastructure. The company's shares fell by 1.15%, with a market value of $272 billion. Solaris estimates in-pit resource for Warintza project. Solaris Resources has announced a mineral resource estimate, MRE, for its Warintza project in southeastern Ecuador, supporting an upcoming pre-feasibility study. The estimate details 909 million tons of measured and indicated resources, grading 0.53% copper equivalent, CuEq, and an additional 1.43 billion tons of inferred resources grading 0.37% CuEq. With a higher cutoff grade of 0.50% CQ, the resources amount to 427 million tons, measured and indicated at 0.71% CQ, and 177 million tons inferred at 0.62% CQ. The project, acquired from Equinox Resources in 2018, has generated significant interest, notably from Zijin Mining. Solaris is undertaking a 60,000-meter drill program aimed at enhancing resource delineation and upgrading resource classification for the pre-feasibility study expected in the latter half of 2025. Concurrently, district exploration programs are targeting additional discoveries of gold, silver, and copper. Western miners push for higher metals prices to ward off Chinese rivals. The only cobalt mine in the U.S., located in Idaho and owned by Jervois Global, remains closed due to plunging cobalt prices, driven by increased production from Chinese mining companies like CMOC Group. Despite investments and preparations, operations were halted in June 2023, resulting in over 250 job losses. Western mining companies face challenges competing with Chinese firms, which benefit from lower operational costs, including cheaper energy and lax labor regulations. There's a growing push for a two-tier pricing system to support sustainably produced metals, but it is yet to gain traction. Policymakers in the US and EU are considering various interventions, including tariffs and transparency requirements, though significant measures have not been implemented. The European Union plans to mandate disclosure of the carbon footprint of EV metals by 2027, which could further drive demand for sustainably sourced materials. Key figures in the industry stress the necessity of a price premium for sustainable mining to ensure the viability of Western producers amidst a challenging market landscape. Copper hits new 3-month low with Chinese demand in focus. Copper prices fell for the 6th consecutive day, leading a significant weekly slump in base metals not seen in nearly 2 years, despite China's recent interest rate cuts aimed at economic support. Disappointment over limited short-term stimulus from a key Communist Party meeting and detailed plans focusing on long-term financial strategies for local governments have not alleviated concerns about immediate demand in the copper-heavy property and construction sectors. Reflecting weak Chinese demand and increasing global inventories, the LMX index of 6 base metals plunged 5.6%, and copper prices dropped 1% to settle at $9,216.50 per ton on the London Metal Exchange. There were also notable signs of demand weakness as China's refined copper exports in June more than doubled, hitting a new record. Zambia sees copper output growing to 1 million tons by 2027. Zambia's finance ministry has projected a 40% increase in annual copper production, targeting 1 million tons by 2027. This growth is driven by anticipated supply shortages and rising demand from the energy transition to electric vehicles and renewable energy. Zambia's copper output had previously declined to 698,566 tons in 2023, amid frequent tax changes and clashes with the former government. The ministry's medium-term budget plan outlines increased production starting in 2025 assuming that challenges at major mines are addressed and new projects and expansions are implemented. The nation also aims to quadruple output to 3 million tons by 2031 by enhancing mineral resource mapping through advanced surveys, capitalizing on copper's crucial role in global energy infrastructure. By Tonga Mitamingi. Anglo American to sell 2 assets to Taurus Funds for up to $195 million. Anglo American has announced an agreement to sell 2 royalty assets, including a De Beers-owned asset linked to the Onslow Iron Project in Australia, to Taurus Funds Management for up to $195 million. This move follows a review initiated in February, as Anglo American aims to divest less profitable assets and increase its focus on expanding copper production. Taurus will pay $125 million in cash and up to $25 million in deferred consideration for the De Beers unit, while the second asset, a gold and copper royalty related to Chile's Caspiche project, will be sold for $25 million upfront and up to an additional $20 million in deferred payments. Avalon reports drill results of up to 1.95% Li2O at Ontario project. Avalon Advanced Materials has reported promising drill results from its 2024 winter drilling campaign at the Separation Rapids project in Kenora, Ontario. The project, a joint venture with SCR Sibelco NV, aims to expand and upgrade resources at the Big Hopper deposit, with results including 512 assays from 5 diamond drill holes. Current estimates for the deposit are at 10.08 million tons of measured and indicated resources at 1.35% La2O and 2.81 million tons of inferred resources at 1.38% La2O. CEO Scott Monteith expressed optimism about the results and announced ongoing advancements in their Thunder Bay lithium processing facility, crucial for integrating northern lithium resources with the EV battery manufacturing sector. Cleantech produces battery-grade lithium in first phase of DLE pilot. Shares in Cleantech Lithium surged after the company announced the successful completion of the first phase of production at its direct lithium extraction DLE pilot plant in northern Chile. Operating since late March, the plant achieved a 95% lithium recovery rate from brine, producing high-grade lithium and resulting in an 8.5% stock price increase. With notable impurity rejection rates, the low impurity eluate is favorable for further processing. Cleantech's Laguna Verde project exemplifies the promising potential of DLE technology, which could significantly boost Latin America's lithium output and global supply. Major firms, including Chile's SQM and US's Albemarle, are exploring similar DLE implementations, aligning with global efforts to meet the growing demand for lithium driven by the electric vehicle market. Indonesia launches nickel-tin online tracking system. Indonesia has launched an online system called Simbara to enhance the tracking and accountability of nickel and tin from mines to processing facilities, thereby increasing government revenues. Initially implemented in 2022 for coal, the system has improved governance in that sector, ensuring companies meet state liabilities. Finance Minister Sri Mulyani Indrawati hopes to replicate these successes with nickel and tin, anticipating enhanced compliance and increased royalty payments between 5 trillion to 10 trillion rupiah annually. The system will monitor the transportation and documentation processes to mitigate illegal mining and oversupply, with plans to expand its use to other minerals and link it to manpower and environmental compliance. By Francisca Nangoy and Gayatri Soroyo. Lynas Rare Earths signs contracts for Mat Weld Power Station. Australia's Lynas Rare Earths has entered into a contract with Zenith Energy to construct a hybrid power station at its Mat Weld mine and concentration plant. The facility will combine a wind farm, solar farm, and battery energy storage system, totaling 65 megawatt MW capacity. It will also include a 17 megawatt gas-fired power station and a 5 megawatts diesel standby generator as backup. This hybrid solution is projected to cut greenhouse gas emissions by about 60,000 tons of CO2 equivalent compared to a diesel-only station of the same size. Zenith Energy will finance, build, operate, and maintain the hybrid power station for 15 years. Gold price slips as traders absorb Biden withdrawal from U.S. election. Gold prices dipped slightly on Monday as traders considered President Joe Biden's announcement to end his re-election campaign, which may influence Donald Trump's chances of returning to the White House. Spot gold traded just below $2,400 an ounce, losing earlier gains. Biden endorsed Vice President Kamala Harris as his successor, pending her official nomination at the Democratic National Convention. While uncertainty increased gold's safe haven appeal, potential reversals of the Trump trade could spur additional selling. Meanwhile, Asian buying fatigue, particularly in China, where gold's premium has turned into a discount, signals weakened demand. Despite a 15% surge in gold prices this year, driven by expectations of U.S. interest rate cuts and geopolitical tensions, Trump's potential economic policies like tax cuts and a weaker dollar could create mixed effects on the precious metal. Additionally, China's recent economic support measures saw a drop in gold imports, while gold ETFs and futures have been gaining. By late afternoon in New York, spot gold was at $2,397.80 an ounce, with a slight decrease in the Bloomberg Dollar Spot Index and a rise in the U.S. 10-year Treasury yield. By Yvonne Yuli and Jack Whittles. Karora shareholders back Westgold merger. Shareholders of Canada's Karora Resources have overwhelmingly approved a $1.23 billion, $818 million acquisition by Australia's Westgold Resources, paving the way for a new Western Australian gold producer with annual output exceeding 400,000 ounces of gold. The deal, which received 99% approval from Karora shareholders, now awaits final approval from the Ontario Superior Court of Justice, expected on July 24th. The transaction, set to close on August 1st, will integrate Karora's Beta Hunt and Higginsville gold mines with Westgold's existing assets, including the Bluebird and Great Fingall mines and the Lakewood Gold Mill. This merger will create a mid-tier gold miner with 3.2 million ounces in ore reserves, 13 million ounces in resources, and a market capitalization of around $2.2 billion, $1.46 billion. High returns lure wealthy investors to fund coal as banks exit. Wealthy Australians are increasingly funding coal projects through private credit as banks retreat due to environmental, social, and governance (ESG) concerns. Income Asset Management Group Limited, IM, is one such fund manager offering high-net-worth individuals investment returns of about 12 to 13% per year by providing private loans to coal and other mining companies. IM has placed over $500 million, $335 million, in loans over the past 3 years in projects like Whitehaven Coal's $1.1 billion loan and Newcastle Coal Infrastructure Group PTI's coal terminal. This rise in private credit coincides with a slowdown in renewable energy investments due to rising costs and approval delays, forcing companies to seek alternative financing. Despite traditional lenders' withdrawal from the sector, wealthy investors' appetite for strong returns has maintained a healthy financing pipeline for coal-related projects. However, there are warnings from environmental groups about the long-term viability and risks associated with investing in coal. Amplats says on track to demerge in 2025, plans secondary London listing. Anglo American Platinum, Amplats, anticipates completing its demerger from Anglo American by next year and plans a secondary listing in London, according to CEO Craig Miller. The company, which recently reported a profit drop of 18% to 6.5 billion rand for the first half of the year, has also cut 3,700 jobs to trim costs ahead of the demerger. This restructuring is part of a broader strategy by Anglo American CEO Duncan Wanblad, who has been focusing on reshaping the group following a $49 billion takeover bid from BHP Group. Investors are keenly awaiting Anglo's first-half results and updates on the resolution of an underground fire at one of its Australian coal mines, as the sale of these coal assets is crucial for raising capital. By Felix Ginny, Melanie Burton, Nelson Banya, and Clara Danina.